Welcome to my channel. I'm Scott, and in this video I'm going to walk you through the process of valuing GE stock by analyzing their financial statements and dissecting their financial ratios so we can determine if it's a buy or a sell. Let's get started with the model. This is a large cap company, 180 billion market cap. They're trading at 167 a share, and they have 1.1 billion shares outstanding. General Electric is doing business as GE Aerospace. It is an aircraft engine supplier. GE Aerospace is the successor to the original General Electric company that was founded in 1892. That entity split into three separate companies between 2021 and 2024. The company we're looking at is GE Aerospace after they divested their healthcare and energy divisions. Let's look at their financials. The way you value a company is you estimate the free cash flows into the future and then you discount those numbers back to today's value. That's what we're doing in this video. And free cash flow is cash flow from operations minus capital expenditures. Their free cash flow exactly doubled from 21 to 22, 4.7 billion. It dropped 24% into 2023. But in the trailing 12 months, it's back up to 2022 levels. They have really low margins. They only convert 7% of their revenue into free cash flow. Net income is a profit or loss on the income statement. It's revenue minus expenses. A really big negative in 2021, a smaller negative in 22, then a solid 9 billion in 23, cut in half to 4.4 billion in the trailing 12 months. Revenue is the sales for the company, and that goes up each year from 56 billion to almost 70 billion. They pay a tiny dividend, 2/3 of 1%, which cost them $1.2 billion. And they have plenty of free cash flow to afford that. We estimated 4 years of future free cash flows. We also estimated the terminal value, which is all cash flows past year 4, that's 160 billion. We discounted those numbers back to today using the weighted average cost of capital. We get a value of the company of $140 billion. We divide that by 1.1 billion shares. And we get a calculated stock price of 131. They're trading at 167, so they're trading at a 28% premium. It's a sell according to the model. There are 70 companies in the same industry as GE, and if they have a number in red, they're worse than the median. If they have a number in blue, they're better. They spend a lot on CapEx, 1.6 billion. CapEx is the investments in property, plant, and equipment. Their debt-to-equity ratio is equal to the average, worse than the median. A lot of companies in this industry pay a dividend. Their dividend is about average. They generate a lot of free cash flow, 4.7 billion. RTX generates the most, Raytheon. They are number one in market cap, 180 billion. All their price multiples are worse than the median, but their price to free cash flow and price to sales is better than the average. Lockheed Martin has the best price to free cash flow. They're trading at 18 times free cash flow. GE generates a lot of revenue, but behind RTX, Lockheed, and Boeing. Boeing generates the most. And GE is regressing. Their 5-year annual revenue growth rate is declining, -5%. Axon, the inventor of the taser gun, they generate the most, 31%. If you put $10,000 into this company 10 years ago and reinvested the dividends, after 3 years, you'd be up about 25%. Then you would have been down about 70% in 2020, really deep in the red. Just recently, you would have been back to the green. The stock has come up a lot the past few months. Let's take a look at their latest 10Q. We'll start with their income statement. Revenue of 16 billion, up from 14.5 billion. Sale of equipment, 6 billion. Services, 9 billion. And they also have insurance revenues, 900 million. They generate 8 billion in aerospace, 3 billion in renewable energy, and 4 billion in power. That totals 15 billion, then corporate 800 million. That gives us 16 billion. This is the last 10Q. They're going to report renewable and power. Those two segments are part of GE Vernova. They talk about it right here. Following its spin-off from GE on 4/2, which is after the 10Q we were looking at, because the 10Q we were looking at ends 3/31, GE Vernova is now a standalone company that will release its financial statements inclusive of renewable energy and power. Here's a ticker we're looking at. GE, 180 billion market cap. The new spun-off entity is GE Vernova, 48 billion market cap. And you could see it started trading on 4/2. Let's see their expenses. The cost of equipment sold, 6 billion. Cost of services, 5.6 billion. SG&A, 2.3 billion. So total expenses, 15 billion. So their net earnings is 1.6 billion. It was 7.5 billion. The only reason it's so high was the other income of 6 billion. That's mainly the gain on the spin-off of GE Healthcare. Let's look at that balance sheet. Current assets, 60 billion. Current liabilities, 51 billion. So they have a current ratio above 1. Current ratio is current assets over current liabilities. Total assets, 164 billion. Total liabilities, 132 billion. Assets minus liabilities equals equity. That's 31 billion. They profited 88 billion from running their business, but their equity would be a lot higher if they didn't buy back so much stock. They bought back 78 billion of their own stock. Treasury stock is a contra equity account. Let's look at the statement of cash flows. Operating cash flow, 1 billion. Last year it was negative 259 million. Investing cash flow, 800 million. They spent 421 million of PP&E. Last year, 300 million. In their financing section, they had a cash outflow of 200 million. They bought back 300 million of their own stock. They paid 86 million in dividends. Let's look at a company on Simply Wall Street. Its last price, 167, 183 billion market cap, up 5% in the past week, up 63% in the past year. Let's see what they say about the company. GE designs and produces commercial and defense aircraft engines, integrated engine components, electric power, and mechanical aircraft systems. They also offer aftermarket services to support its products. They operate in the US, Europe, China, Asia, the Americas, Middle East, and Africa. Incorporated in 1892, based in Ohio. Here's the stock price since 1990. It was $41. It hit almost 500 in 2000. That was its highest ever. It fell to 59 in 2009, then ran up to 250 in 2016, down to 61 in 2018. And it's done really well since then. It did have that big COVID dip. Then it ran back up to 180. That was just recently in March. In April, after they released earnings, it came down to 136, but it's creeping back up there. Currently about 170. Simply Wall Street's valuation is 205. They say the stock is 18% undervalued. 16 analysts priced this stock at 183. Now that they did their 3 spin-offs, the revenue is projected to come down a little bit to 36 billion because Vernova had a lot of that revenue, and that's going to a different entity, ticker GEV. The forecast is 41 billion by 2025, 45 billion by 2026. Free cash flow forecast for 2024 is 5.2 billion, 2025 6 billion, 2026 7.1 billion. This red line is their debt, the blue line is their equity. They did have debt of 387 billion, and you could see it's come all the way down to 20 billion. Equity is higher. Equity is 31 billion. The green line is their cash. They have cash of 20 billion. The CEO's salary has been up and down. It's currently a cool 2.5 million. Total compensation 15 million. Tenure as CEO 5.5 years. In the past year, some insiders selling, no buying. 77% of the company is owned by institutions and 22% by the general public. Capital Research is the biggest shareholder, then Vanguard, BlackRock, and Fidelity. Then you have T. Rowe Price, Dodge & Cox, Strategic Advisors, BNY Asset Management, Eaton Vance. Employee count was a lot higher in 2013 when they were a complete company. Now they divested their companies, so this entity is down to 125,000. And the ticker trades on the New York Stock Exchange, Mexican Bolsa, Lima Bolsa, London Stock Exchange, Swiss, Euronext Paris, Deutsche Börse, Xetra, Columbia Bolsa, BATS Europe, Santiago, Wiener Börse, EuroTLX, Bulgaria, Santiago, Buenos Aires, Sao Paulo Bolsa, and the CBOE Australia. So let me know what you think. Give the video a like, subscribe, or comment below. If you'd like to get a custom valuation or just support the channel, you can become a member by clicking a link in the description below. Thanks for watching.